how soon before we as consumers start to feel less of the pain at the pump?
I think there's still a bit of a journey to go yet, because there's actually more than one oil price, and the one that you've just referenced is really the what I'd say the financial markets price, because there's a lot of investors, speculators that invest in these, and so that's what we're referring to. There's actually the physical price of Brent is actually still over $100 a barrel. And even worse, because we mainly import product here in Australia, so diesel is particularly the biggest, and that's still closer to $200 a barrel. So, prices have come down, and that's welcome, but it could still be some time before we feel the effect at the bowser.
Yeah, you say it is going to be some time before we actually start, maybe perhaps feel less of the pain at the pump. But I wonder, though, are the days of cheap oil over?
Definitely for the foreseeable future. Where the oil is mainly coming from, it's coming from deeper, at greater depths offshore. It's coming from where it's coming from onshore. That requires its own conventional sources, so it requires fracking, and that can be quite expensive. I don't think we can expect cheaper oil prices, in the foreseeable future.
Right. Now, we have seen Energy Minister Chris Bowen providing us regular updates on the nation's own reserves. I wonder if he is right to breathe a sigh of relief this morning, or should Australia still brace itself for prices to go back up?
I think there's still uncertainty. I mean, look, obviously the ceasefire is welcome, but it does seem a bit fragile. There are sort of certain conditions, demanded by both sides that there doesn't seem to be full agreement on. But I mean, let's just take that the Straits is now open. Just working through that, it's not like we can go back to full production as it was before the conflict started. Roughly, there's estimates, and this is coming from the International Energy Agency, which has got probably the best analysis on this. I mean, they're saying it's going to take about 5-6 weeks before we get 80% of the oil that's been affected coming back on. So we're not, and that other 20%, it's still unknown. It could take many more months for that, because it all depends on how it was shut in. And it also, if you look at the logistics, I think there's about 20 tankers that are full of oil that can come straight out of the Straits. But then it's also going to take time to restart those fields, get the workers back. Other things you've got to consider is the insurance. I mean, all these vessels have to be insured, and it's just the appetite of those insurers. Are they prepared to insure those ships? So there's still many complexities. The fact that they've declared the Straits is open, we've still got to work through the mechanics of what that actually means.
I wonder how you see this crisis changing the oil market and supply as a whole, in order to avoid future chokeholds that could impact the global economy as we're seeing it now.
Yeah, because it really has focused that, so much of the world economy is affected by this one stretch of water. And so I think the reaction here, and particularly in the Asia Pacific, because we've got to bear in mind the whole region it does not have a lot of oil. It has to search for 3/4 of the oil that it needs every day. So I think they'll be looking to diversify, and I think we've already seen that reaction. We've seen the uptake of electric vehicles, electric bikes, and I think that trend is only going to continue, because I think that's certainly an option that we will have to look in the medium and long term, is to electrify more of our transport system in order to just simply diversify and not be so dependent on oil.
Kevin Morrison, Energy Finance Analyst at the Institute of Energy, Economics and Financial Analysis. We thank you so much for sharing your insight with us.
Thank you.